I will hit the button.
Now.
There we go.
Oh, here we are.
All right, take two. So that awkward moment still continued because we
must
did
have
not
fun.
start the webinar. Now that people are filing in and joining us, but we are live on FaceTube, Facebook and FaceTube combined. If you are watching us there, that's totally fine. You can put in comments. Yeah, someone said Facebook user. Okay, so I don't know who that was. That's interesting. So I can't tell who actually posted unless I actually go to that Facebook channel. So that's fine. So we're trying a new tool here, but we're continuing
seeing the limitations of said tool. So good test run.
Right.
Say who you are, because apparently our tool doesn't tell us.
It's Matt Fulton.
Oh, hey Matt. There you go.
He's watching us on Facebook. So we're continuing our saga with payroll fundamentals and QuickBooks workflows with our friend Kate from ADP, who's helping us with the ADP side of things. But really, our payroll fundamentals is really not dealing with any particular payroll service. We really just want to set the foundation of just some of the payroll terms that are involved. And today we're going to be talking about payroll deductions, right? So
exciting stuff.
Carrie had an interesting. You have an interesting story about. I think we mentioned it on a prior topic where we were talking about gross versus net pay. You could set your watch to your children coming to you after they got their first job, right?
Yeah. So with a blended family with 6 kids, we had to hear that. We heard this 6 times. So the very first time was hilarious when my son came stomping through, slamming doors, saying, "They're ripping me off. I'm quitting my job. That's it. I thought I was getting paid, $300 and my check is $125." And slamming it down. And what is all this stuff? I said, well, let's read through your pay stub. Calm down. And no, I'm quitting. Where's the phone? So we said, calm down, and then starts cussing, screaming. What is this federal? What is FICA? What is M-Care? What is SESI? We're in South Carolina State. What is all this? They're stealing my money. So
you had at that point you had a discussion about what is a payroll deduction.
We did. We had to say, take a deep breath, maybe breathe in a paper bag. No, you're not getting $300. So that ship has sailed. If you've already spent that money, sorry. And then we usually segue into budgeting from there, but we've got to talk about what your paycheck is, because it is not $300. And it's really it's really fun as a parent to do this 6 times, let me tell you.
Well, you had lots of practice.
And it doesn't matter, that the oldest one did it 9 years ago. The youngest one coming through with her first paycheck, same thing. She has, short-term memory problems, or long-term, whatever it is. She's like, I never heard you say that before. And anyway, so it's always a really fun day, payday, for our kids' first real job.
I think by the 6th child, you probably were like, you were prepared. You were prepared. A prepared statement.
Yes. So what I would
3-ring
want to hear that. Are we ready for my parenting 101? Where's my money they stole from me? Response.
Right. So you mentioned now one of the payroll types of deductions, right? So and that's the most common because it's a mandatory payroll deduction. There's no choice in the matter, and that's typically the payroll deductions that have to deal with taxes, right? So the
Yeah,
withholdings, the federal withholding, the state withholding, the FICA, as you mentioned it.
and Medicare. And they don't understand. Kids do not understand. I would have to say, okay, remember when you filled out that W-4? I don't care. I want my money. So, so we would, review. We'd have to pull that piece of paper back out and say, remember when I asked you, do you want a nice refund in April or not? And they don't remember anything because they've been, they've had their money stolen out from under them.
Right. Now, so there are two basic types of payroll deductions. There's the mandatory and then the voluntary. All right. So, and we'll go into, kind of, a high level overview of what these two types of payroll deductions are, but taxes, the ones that you don't have any choice in the matter, those are the mandatory ones. But at its core, at its fundamentals, it is something that will reduce your gross pay to your net pay, right? So as we talked about what actually gets given to you and that you can spend after that. These are things that will reduce the gross wages into the net of the paycheck itself. So there are mandatory ones. So Kate, what would be other than taxes and the withholdings, what would be some of the other mandatory payroll deductions, or are there other mandatory ones?
Well, I mean, I guess if you have child support, that's on the mandatory, but not everyone has child support. But I believe just really the taxes are mandatory.
If there's some kind of a garnishment of wages,
like any type of, those are, not everyone has those.
Child support, alimony, basically when a court gets involved, then it becomes, it might have been voluntary at first, but
no, that's no longer your voluntary part is over. So
so we want to talk a little bit about what some of the other payroll deductions are. So health insurance, the health insurance, being able to, all of the benefits that of the employee portion of that. And we're not talking about company contributions, right? Because that's another topic. Right?
Yeah, there's 401k plans, like any type of retirement services, medical, pre-tax, advancements. So if a company wants to give an employee an advancement, obviously that would be an deduction until the company gets paid back. Loans are another one. I feel like there's so many deductions. The list can go on. It's crazy what sometimes.
So you've got things like life insurance, job-related expenses. So like if you like we were talking yesterday on the we meaning me on the Cubic Power Hour. We were talking with Alicia yesterday, and she was talking about gas stations and convenience stores, and they had set up an employee meals payroll deduction where the employee could basically shop for their own food and then they would just take it out of their paycheck, right? So it would be a payroll deduction. And the interesting side note that one of her clients noticed is that she could tell, or that the client could tell when the employee was going to quit, because they would stop buying food because it would come out of their paycheck. So they would know, it was kind of like a precursor to them quitting. So she's noticed if they stop buying food, deducting it out of the paycheck, that maybe they should have a conversation with happiness at work.
Yeah.
So all of those things are voluntary, right? Where you could have those job-related expenses or employee paid deductions taken out of the paycheck automatically. And Kate kind of alluded to, there's another caveat to those deductions, that some of them may be pre-taxed.
Yes.
Meaning that they're reduced from they're deducted from the taxability of certain taxes. I'll give you an example, Kate, about you had mentioned 401k. So what is the caveat to that?
So it depends which type of retirement service plan you have set up, because some are pre-tax, some are post-tax. But if you do it pre-tax, obviously the percentage or the dollar amount, whatever you have set up, would come out pre-tax. So you won't be paying taxes right now on that money. And then if you choose to do the post-tax, that deduction would come out after Uncle Sam takes his portion of your paycheck.
Right. And then when you're talking about like a 401k deduction, not all taxes are pre-tax, right? Or not all deductions are pre-tax. So, if you elect to have $100 taken out of your paycheck for your 401k, let's just, as an example, if you get paid $1,000 and you're giving 10% of that, so $100. So now on federal and state, it's calculated on $900 of gross wages as opposed to the full $1,000. But for FICA, there's that FICA guy again. He's calculated on the full 1,000. But things like health insurance premiums, not the
Fully
case, right?
pre-tax.
That's fully pre-tax.
But there's always buts. It's like, is it for the employee or is it for their family? Because that would be something you'd pay out of pocket anyway. So those are kind of things that you have to have an expert in your corner to tell you whether they're pre-tax or not, because it's not as clear. It's as clear as mud. But handling it, you need to know, is this benefit pre-tax or post-tax? Is it completely pre-tax, or is it just FICA?
All right. So I put in the comments. Hopefully it came to it has a check mark next to Facebook and YouTube. So I put in an ADP article. So thank you, Kate, for not for sharing that, even though you didn't share it. I found
it's so funny. I just had it pulled up. I literally put it. I could have just pasted it into the chat. I had it pulled up.
Oh, there you go. So teamwork. So for the folks joining us for the live webinar, they can see the ADP article about payroll deductions, and then I posted it out in the social media web ether as
Great
well.
minds think alike.
That's right. So that is the fundamentals of payroll deductions, and we wanted to kind of segue into some of the QuickBooks news, the news about that I saw from a QuickBooks article, which was talking about payroll. That has to do with payroll deductions, but has to do with retirement plans, right? So coming up on the end of June, was it the end of June, Kate?
Yes.
We just talked about
June, and then end of June, I believe it officially in California starts July 2nd.
Yeah,
I believe. Don't hold me to that, but if I remember correctly.
Okay, so if for a company that has, I think the requirement is if you have 5 employees and at least one of them is over the age of 18, which pretty much is everybody, unless you're, running a sweatshop. Which you probably have other issues if you are with child labor and whatnot. But if you have one employee that's over the age of 18 and at least 5 employees, you are required to offer a retirement plan for your company. So that would require you to partake of one of these payroll deductions, and then you need to now figure out whether that's pre-tax or post-tax, as far as a deduction is concerned. Now ADP, the nice part about when you do work with ADP is your payroll provider, they do offer retirement plan options, right? We had Lila on workshop a while back, so we can reshare that that workshop if you want to take a look at some of those things. But I mean, the big win with if you're going with ADP as your payroll provider, everything is under one roof.
Yeah.
It really just is a 360 type of integration when it comes to working with your retirement plan and your payroll provider at the same time. Can you speak a little bit to how that works? I know Lila would be who you would defer to for most of these things, but maybe speak to how that works, because you'll see by doing some research, if you look at the state of California article, that a lot of them will say they work with your payroll provider or integrate with your payroll provider, but to what extent? And we see all this with apps that work with QuickBooks.
With QuickBooks. Well, which one? Is it QBO? Is it desktop? Is it point of sale? What? And does it really work with it? Because often that's not true. We find and you end up in a mess.
Yeah,
So,
no,
Kate,
sorry, Dan, didn't mean to cut you off.
No, I was trying to segue it over to you to speak to that.
We all got sidetracked bumper cards, but no, it's so with ADP and the retirement services and ADP also doing your payroll. It's actually called 360 integration. So it's funny that you said that. It seamlessly, everything pulls directly from the payroll, goes over to the 401k. Almost just knocked my drink over. But you don't have to worry about pulling an Excel and then uploading an Excel somewhere else, because that's a lot of times when people say they integrate with payroll platforms, it's not a true seamless integration. It's you still have to pull something, upload it. There's still a lot of like back end work for either the bookkeeper or the business owner, which everyone knows neither of them have extra time in their day to do. So just integrating it is truly just, it's seamless integration, 360. Everything speaks to one another, speaks the same language. There's no trying to hold one hand to get to the next part of the playground. Like we're all going full steam ahead.
Yeah, and I had a friend who was using ADP for their payroll, but using someone else for their retirement plan, and they literally said, "I feel like I'm imprisoned to my retirement plan because it basically took someone a full-time job, trying to do that integration, and then when you talk to them, it was like,
A light bulb went off.
They were just, I mean, it can be managed by the employee through their app integrations and things like that. So it was a big win for them. So when you're looking at these types of situations, when you have you're now required to look into a retirement plan, maybe this is a trigger event, right? That may say, well, maybe I don't want to get involved with that sort of thing in the payroll service that I am using. Maybe it's a good time to reach out to someone like Kate, or just reach out to Kate anyway.
Anyway, yeah, there's some states where it's like right now they just passed that you have to have an active program in place. There's some that have proposed it. There's some that have just no legislation at all. So it's always good to, if you're not sure, because I know a lot of the bookkeepers that I work with through CVG, they have clients all over because they're virtual bookkeepers, which is great because then you get to grow your business. But it's definitely hard to try to keep up with all the legislations, the regulations, everything like that. So really don't be afraid to reach out to me as a support guide, because I can get you the answers that are factual instead of just trying to rely on Google. Just makes it easier. Let me do the work for you.
Yeah. I remember.
Go ahead. I
was just going to say, I remember I had a client years ago, and they had, do it yourself QuickBooks payroll, and she was savvy. I mean, a lot of the bookkeepers that we work with are, they know enough about payroll to know that they don't know it. This particular person that I trained and set up on QuickBooks to do job costing, she understood payroll. She just was savvy with it. They had a 401k and we had to set it up. Everything was manual process. We had to set it up so that it did the right percent and it pulled it out and it did it, the pre-tax, post-tax, we had all that flowing. But once we ran payroll, then there were more steps that she had to do. So I love this integration idea. QuickBooks doesn't offer that. So we then had to, and this was years ago too, we had to run a report and then print it. And then she had to key it in and upload and run and give them the payment. And then go back into QuickBooks to show that she made that payment that it was ready for. So it was all these extra steps. And she was able to do it without a problem, but it still took her a good hour. It wasn't a huge payroll, but it was very complicated.
Mm-hmm.
And ADP also provided us with a resource, which I put in the ABO Facebook group under files. So I just posted the link to the files section of that group. If you're not a member of that group, you can just quickly join to get access to those files. You can it's interactive, right? Like you can click on the state and see what the current status is, and it's color coded to show you which states have something already in place, which states have something on the horizon, which states have died in committee.
Okay, our state is
South Carolina.
The idea is dead. We don't want these people to ever stop working. So we're 100.
For sure. We do have a proposed legislation.
Okay.
Yeah.
So
it's a proposal.
Maybe one day.
Yeah, like my brother, he's been engaged to his fiance for 12 years.
Well, it's because COVID happened and ruined all the wedding dates. Now you have to wait forever. We'll give him an excuse.
I bet he ran all over that excuse, Dan.
For 12 years now.
Well, I know, but he's like, oh my God, I've got the best excuse ever. And it's still going on.
Still going on. It's crazy.
It didn't stop my kids.
No, didn't stop yours.
They just plow right through.
They plow right through and said, that's just another thing. We get to have masks and hand sanitizer and, parties later. And, the money just keeps on going.
Right. So hopefully that puts shed some light on what payroll deductions are and the different types of payroll deductions, and some of the news about required payroll deductions. Now even though they were voluntary, some states it's voluntary, but now some states it's mandatory, and the whole pre-tax post-tax, it's not a debacle, but it could be if you don't set it up right.
And yeah, you can really. One thing that is for certain is you don't want to mess up payroll, because if you make your employees angry and they come skidding in the house, like my kids, because they got that net check, you don't want them to come, get angry because you messed up their check. It's mission critical to slow down what you're doing and get payroll right, or your business is going to suffer. So that's yeah, it's important. It's very important.
You could potentially have upset employees. You could have nasty IRS notices and
penalties,
fines and penalties and interest and all sorts of stuff.
We've had people who don't understand how bad the penalties can be, and they're like, "Oh, I just want that cheap version of payroll," or the looking at the price. But I'm like, listen, if you number one don't know what you're doing, it's not going to be. You can't just Google your way through this.
I know a lot of people really like their advisors. I know we can work with a bunch of different advisors too. So it's just good to have the conversation, because you never know, like, when the last time you actually benchmark your internal fees. Like ADP doesn't charge off internal fees, and they don't charge off of like the percentage of how much is actually in retirement or be like in that plan. So it's definitely good to, worst case scenario, you have a conversation, you realize you already are having the best bang for your buck. You're not spending as much on internal fees. And that's worst case scenario. Best case scenario, you save money, it's integrated, you save time, and your life's just easier. So it's really a win-win. Conversations take maybe 10 minutes to have, but you definitely don't want to make sure you're not doing something that you're supposed to be doing.
And
Right.
and for these required plans, there could actually be a credit with regards to the fees that you are paying for them. So
Tax
it's worth.
credits are free money.
Yeah,
Yeah.
there's not one client that comes on board that I don't mention that Secure Act to, because it just, as a small business owner, who doesn't want 15 grand in tax credits? It's a no-brainer. So it's definitely, you don't know about the Secure Act, we can definitely inform you on that and make sure you guys get some tax credits at the end of the year. Because the last thing I hate is when I get an email in like February and they're like, hey, can I set up I remember you mentioned about that Secure Act. Can we set it up for last year? Fortunately, there is a cutoff, but we can get you for this year and get you all set up. This way you can start taking advantage of the tax credit. So there's not very often the government just hands out money. I know, although in the last 2 years, we've seen it more than ever.
Yeah, the
with
PPP.
the stimulus checks, PPP loans, but tax credits are huge and they definitely make a difference for the bottom line for business owners. So if it's available out there, everyone wants to retire. It's just an easy conversation just to have. So make sure that you guys as advisors and bookkeepers are making sure that your clients are aware of it, because it's just something that, one, you can also offer to them and then end up getting paid more money for managing it.
Absolutely. And, take advantage. I mean, because that's really what to me, that's kind of what the tax code is. It's a guide to behavior, right? Like if they want to promote a certain activity, whether it be buying a house, having children, donating to charitable contributions for an individual, same thing for businesses. They want businesses to offer these health benefits and retirement plans and those types of things. They're giving credits to do that. So definitely, make sure you have that conversation with whoever your payroll provider is. And of course, we have a lovely resource that would volunteer her time.
You're pointing to me, so
am I pointing to you? Okay.
On my screen, you're pointing to me, Dan.
So I guess we don't know where, but the one that says Caitlin.
Either one. If you reach out to Carrie, she'll point you in my direction. So
we know where to find each other. So
all around, it's somewhere in South Carolina.
Well, one thing I did pick up though, that with the laborer, we have more jobs than we have people. We have got to keep our people happy. And one way is with the 401k plan. So regardless of the fact that you get that credit, which is phenomenal, it helps offset something that retains your employees. So it makes us all stronger as and
not only just your employees, even the top employees, because a lot of times your top performing employees are looking long term. They want to, they want this to be like their career, not just a job that they're just trying to get by. They want to make sure that they're setting up themselves for success. And a lot of times the people that do that are the better characteristics and better employees that you want to have under you. So if you offer benefits and you offer all type of benefits, health benefits, 401k, employee plans, different things like that, it sets you apart. And with the great resignation that's going on right now, you don't want to be searching for employees. You want to make sure that you're keeping them happy and don't wait till it's too late.
Yeah. It definitely costs less to have an additional benefit than it does to try to find a new employee.
Costs less, and there's a tax credit. I mean, it's almost a no-brainer.
Exactly. So, this was a great conversation, I think, today about deductions and some of the news that's happening today with regards to payroll deductions. I think next week, since we kind of alluded to the different taxability of some of these deductions, I think we'll talk about wage base, right? We'll talk about that and its ramifications and some examples of different wage base for the same paycheck, which can get a little advanced of a fundamental, but it's something you definitely want to keep on your mind when you're running payroll. And I'm talking over Carrie.
And your W-2, you need in a fundamental world, you need to understand the buckets of the W-2. That's where your wage base is going to show up as well. So, we all reconcile. We love all that part of it. Payroll has to make sense, or there's something terribly wrong.
Yeah.
All right. So we'll see you next week on the Workshop Wednesday. And I don't know how to turn off the Zoom here. I'll just close out and then it'll just cancel out. So we're still working on our technology here.